We have Scotty Sykes joining us from Sykes and Company. So before we get started, Scotty, can you tell us a little bit about what Sykes and Company is and what they do? And Tricia is going to be able to help you navigate through the slides. I think she's controlling those on her end. So just let her know when you're ready.
Yeah, sure. So it's great to be here. Appreciate you having me. I'm Scotty Sykes, shareholder here at Sykes and Company. We are a CPA accounting and advisory firm that focuses specifically on independent pharmacy all over the country. It's really all we do is eat, sleep, and breathe this stuff for independent pharmacies. And as you can imagine, it's been quite a year. So got a lot of good information to cover today with Tricia, and look forward to a great presentation here.
Awesome. And Tricia, how long have you been with PioneerRx?
I have been with PioneerRx for a little over 7 years now.
All right. So a lot of you out there listening or watching this on PioneerRx University may have already had the opportunity to speak with Tricia in the past. Hopefully you'll have the opportunity to speak with Scotty Sykes in the future if you haven't already. But I'll let you guys go ahead and get started. 2020 is a big year, lots of things to consider on top of what we're already looking at on our plate at this time of year. So again, keep in mind, Tricia has the slide control, so just let her know when you're ready.
I'm ready. Let's go. Yep.
All right, so as 2020 starts to wind down, it's time to get some financial housekeeping. And this year certainly had some unique challenges. So Scotty and I are going to walk through some essential things that you can do to get your pharmacy ready.
Absolutely. So some of the things I wanted to cover in particular, and I know we're going to have some Pioneer information throughout the presentation here. We have quite a bit of clients that are using Pioneer, so we are very familiar with Pioneer. Here at Sykes Company, we actually love clients that have Pioneer because of the great just the great platform, the great systems they have, and the reporting you can get from those systems is wonderful from an accounting and tax perspective. But we're going to go over the fundamental accounting basics. I start every presentation with that because it's so important. Inventory, receivables, payroll, KPIs. Of course, we're going to go over some COVID-19 things as well as some tax planning things as we talk about cash flow and just 2020 here in general. So like I said, I always start off with the fundamental accounting when doing any presentation, really, because we see so many pharmacies that don't have this. And if you're a pharmacy, out there and you don't have fundamental accounting, you really don't know what's going on in your store, and you're not using accounting as an asset. And so that's a big roadblock, really, to what you're doing and where you want to go and where you want to be as a pharmacy. When you have solid fundamental data and you're able to understand what's going on in your pharmacy day in, day out, weekly, monthly, you can plan, you can see where it is you're going, you can plan for taxes, you can understand cash flow better, you can understand what's going on in your business. And accounting is an asset. So the most successful pharmacies out there are using their accounting as an asset. So we still see this not being taken seriously in pharmacies. As a matter of fact, I saw one yesterday. We did an overview with them, and very, very strong store. Had all of these ideas and plans on what he wanted to do with such a great year he had, and then he comes to find out a year later he's got this big tax impact. Had no idea that was coming. Had no clue. So he was working. He's just kind of behind the curve there and was not being proactive and didn't really understand his situation. So that put a hold on everything he was planning to do, really. So, he realized he can't continue to operate like that. So that's a perfect example, and I saw it yesterday, of why this fundamental accounting is so important, and especially in a COVID-19 environment here, where, if you're not on the ball here and knowing what's going in and day out, you're going to find yourself in trouble. And if you're finding yourself in trouble, you got to do something. So, and again, this is an asset to your business, and it needs to be taken that way with the changing landscape pharmacies constantly involved in. I mean, just the other day, Amazon's going to be getting into this pharmacy space here. We all knew that was coming, but it's official now with what they're doing. And so, if you got to understand what it is going on in your business, you can't operate out of your checkbook anymore. Now, the fundamental accounting is a daily, weekly, monthly process. So when I'm talking about a daily process, this is where Pioneer's coming into play. What's going on behind that Pioneer system on a daily basis, from the point of sale reports? How is that getting into your accounting system? How are the deposits being reconciled and tied into what you're supposed to be collecting? On a monthly process, you're talking about the sales tax, you're talking about the audit logs, what I call them the audit logs from the prescription system, and how you're using that data within the accounting processes as well. So Pioneer's got really some great resources there with enhancing this fundamental accounting process. And again, as I've mentioned, it's going to identify, this fundamental accounting is going to identify areas of weaknesses, what you're doing well in. Where do you stand compared to your peers and in the industry? You'll definitely understand your KPIs, where you stand there compared to the industry, and you're just going to know more about your business that you can then take that information and act upon it and better enhance your business going forward. So, I know we talk about this all the time, but it's just so important. Everything we talk about from this point forward is going to hinge on that you have this in place.
All right, so within Pioneer, we give you that knowledge to know what your sales totals are and your cash flow, your patient AR, your third-party ARs. So we have two reports available underneath the analysis tab and then your financial reports. The accrual system sales total by payment type allows you to actually see this was the amount of sales in cash, this was your credit card sales, these are your accounts receivable numbers, and so forth. And you can run this for any date range that you like. It's recommended monthly. You could, if you wanted to, run this daily. It'll help because this is going to show everything, not just point of sale, because we know like facility deliveries do not go through the point of sale. Auto posts that you do to AR accounts don't go through the point of sale. So this is a good report to give you your overall sales totals for the time frame. So this is a little example of that accrual report that's based on the payment type, where you can actually see cash totals, checks totals, credit card totals, and that'll allow you to, even if you know what your fees are being charged from your processor, allow you to actually see what those fees are going to be before you actually get that bill. You can see what your accounts receivables are for the patient side. Under the AR column, that's your patients. And then you also can see the third-party remits that were adjudicated during that time frame. So this just gives you the perfect overview of all your sales totals for the month.
And we use this report internally with our clients for sales tax all the time. So this is a good sales tax report that we see, that we use.
Absolutely. I always recommend this, just the regular accrual summary, because it's going to show you, here's your subtotal, here's what you've collected in taxes, so this is what you're going to need, to where you have those totals, you see the tax amounts, you do the math and see that your tax, and then be able to submit this on your monthly tax reports with your counties, your cities, your states, and so forth. Mm-hmm.
So, we talked about that fundamental accounting, and one of the key pieces to that, and is a sound and balance sheet with integrity in it. So, the balance sheet's going to have inventory, and so the inventory is very important, because when you're looking at your financial statements and your balance sheet and your profit and loss, if inventory is not correct, your gross margin's not going to be correct, and therefore your net income's not going to be correct, or net loss if you're running a loss. So inventory is a very important component, and because when we're talking about your gross margin, that's your number one key performance indicator in the pharmacy, is your gross margin, which is revenue minus cost of goods sold. So, and cost of goods sold is directly related to inventory. So if inventory is off $50,000, your cost of goods off is off $50,000, your margin's off $50,000, and then your bottom line's off $50,000. So you can see how that they all relate there. And I have seen issues with clients that have come to us where inventory was off $1 million, and they didn't realize that the accountant wasn't paying attention to it. And so they were paying tax on $1 million that wasn't there. Very important piece here. And so when we're talking about cash flow, and we're talking about integrity in the accounting here, this is going to be very important. The most profitable pharmacies are maximizing this inventory. They're constantly understanding what they're buying, how they're buying it. They are using MedSync. They are using all the tools and technology out there to maximize inventory and keep as little on the shelf as they need to, because we all know that inventory is $100 bills on the shelf. It's not $10 bills, it's $100 bills. So the more efficient, the better you can become at inventory and inventory management, the more cash you're going to have in your bank account, and not just sitting there on the shelf. And like I said, Pioneer's got technology here that you absolutely have to use. You have to get that technology in place. You got it there behind your bench, but you got to be using it. You need to be using that adherence, the MedSync that they have there, the perpetual inventory, absolutely. That perpetual inventory report that's coming out of Pioneer, we take that each month for pharmacies, and we look at that and get that into the system, as the accounting system as well. And so we're getting kind of a real picture of the margin in the pharmacy each month, which is fantastic. So they can understand each month what's going on here. But that perpetual inventory is going to be very important. So Pioneer has some great resources here as well that we utilize all the time for our clients here. Typically we see about 11 turns for inventory in a pharmacy, which is really the rock bottom. So the pharmacies that aren't using the technology, that aren't doing what they need to be doing really to maximize inventory, are around those 11 turns a year, whereas those pharmacies that are really serious about inventory, serious about keeping lean and efficient inventory, and have those processes in place, they're upwards of 16 plus turns a year. And so you can see that all that cash flow is just going to the bank account. It's not sitting on the shelf. So this is really a great area of cash flow management, and using Pioneer is a great tool here.
Right. And I just wanted to show you just a little bit how you could do that math to see those turnovers. So you would use your RX transaction summary by submission report, the total acquisition cost that you would find at the bottom in your grand totals. And then your inventory valuation report. And you would take that, so your turnover would be your total acquisition cost divided by your inventory would give you your turnaround points.
Yeah, and I'll just add to this. If you're using multiple, if you got everyone's pretty much got a main wholesaler, which Pioneer is going to get those cost downloads automatically, usually from the wholesaler. But if you're using some secondaries in here, you need to make sure that the cost, that acquisition costing in the RX transaction summary by submission type report, you can see that 323 number there. those secondary wholesalers, you're probably paying less maybe than you would with your main wholesaler for those drugs. So you need to be making sure that the prices on these secondaries are in the Pioneer system and locked, because that's a great thing about Pioneer. You can lock the price codes here in Pioneer so that when, say, if you're using the main wholesaler, when they do the download each day, it's not overriding your secondary locked price code. And so you're getting an accurate acquisition inventory cost, as accurate as possible, in that RX transaction summary by submission type.
Right, and that cost is based on what you have your item set for the cost used for calculating profit. So, you have a choice. You can use your supplier's replacement cost. You could use a lowest replacement cost. You can also use the last cost that you paid for it. So if you're ordering from different vendors, a last cost, or you can even take an average. So that acquisition cost on the RX transaction is really based on what you have that item set to use your calculations for your profit.
And I love how Pioneer, you guys allow that to happen. Other systems override. So that's great that y'all have that capability. I will just mention here that 323, if you were to annualize that number over 12 months, that would get you an inventory turn closer to that 11 or 16, wherever you are, figure that I mentioned on the previous slide. That was an annualized turnover figure I was referring to.
Yeah, I'm sorry. This is a monthly.
Yep.
So in Pioneer, we want to make sure that at the end of the year, or whether you're doing a physical year or a calendar year, that you make sure that your counts are correct and your inventory is correct, and you have corrected that inventory in Pioneer, because you're not going to be able to go back and fix those historically. So we really stress the fact that on December 31st, make sure your inventory is right before the new year turns in.
Certainly. And a couple points I'll mention here. We typically like to see the periodic cycle counts that you're doing throughout the day. Pioneer, I believe you guys allow a system or a process in place to implement that in a pharmacy. If not, I may be mistaken there, but those typical periodic cycle counts will help you take a lot of that stress off the last day of the month each year, or the last day of each month and the last day of each year. So that's typically what we would see there. And then, of course, any returns you're doing at the end of the year or at the end of the month or year, that those returns, although they don't show, there's a timing difference between when you're returning inventory and when it shows up on the statement of your wholesaler and the timing of that on your perpetual system. You just got to be cognizant of that, because if you're talking a big dollar volume, it could skew the month or the year you're working with. So just be careful with returns and how that interacts here as well.
Yeah, and Pioneer does give you the option to enter those returns, maybe as you're putting them in the return box, maybe throughout the month. And then you could actually process that return when you're ready at the end of the month or every quarter, however often you do that. You do have that option in Pioneer to create that return invoice. So we know that you're not necessarily going to get the dollar amount that you paid for them, but it does remove it from inventory and gives you the option to see what your cost for profit is set for at that time. So in Pioneer, we do have several reports that we offer you for your inventory. We have a control balance summary. We have a verification report. Then we have the valuation. The regular inventory valuation can be ran for each individual inventory group that you have. So let's say you have a retail RX department and maybe you do 340B. You could run this inventory valuation for each one of those. Or you can run it just for retail over the counter, you could also run it for all of them on one report. These are an as-of based report. So you would run it as of, so like for the end of the year, you would run it as of 12/31. You're going to want to do that on the very first day of the month that at the beginning of business to see what that value was at the end of the year of your inventory. And this is just a little sample of what that report looks like. And remember when I said that, to make sure your inventory is right. If you notice, this one has some negative balance on hands. And that may be, in this case, it's compounded items where maybe they didn't make up the batch in Pioneer, which, allows you to create those batches and then fill those compounds as you go. Or let's say you do a 340B, but you're on a replenishment and you pull it from your, you're pulling the actual inventory from your retail inventory. So your 340B will show negative until you do that inventory transfer and receive that in. So it's a really good thing to keep an eye on your inventory, and you can run these reports at any time. If you want to look at your inventory in the middle of the month, you can run these. This is one of the main reports that you're going to want for end of year.
Certainly. Okay, so inventory is a very key component, and of course, third-party receivables is as well. We like to say this is your largest unreconciled bank account. Many pharmacies, they adjudicate and then not real sure what's owed to them at any given point in time. And so that's why we call it your largest unreconciled bank account. But there's systems out there, and Pioneer has their capabilities as well to help you track what's owed to you. And so what's outstanding, how many days outstanding it is, etc. And then you can take that information and accurately get it in your accounting system. Because a pharmacy needs to be on that accrual-based accounting, so when you adjudicate a script, you're getting that in income, so you know exactly how you're performing that month and that period. So accounts receivable is going to be very important with that. And of course, cash flow management is key here too. Is when you understand what's owed to you from who and how many days outstanding it is. You can maybe act or see errors or see issues or concerns or maybe some rebilling or whatever you may need to do to manage that cash flow that's not hit the bank yet. So this is a very key component of that. And we always say fill and hope is not a sound strategy. It's fill and manage. Managing this third-party receivable system, or whichever one you're using, is going to be very important in that. And again, technology obviously is going to be your best friend with this to help you manage this effectively and efficiently. We have seen where there's someone in-house doing all of this by hand, but absolutely you need to be using technology without a doubt to assist you with this.
Absolutely.
And Pioneer has the systems here to help you with that. But you're also going to be able to get DIR fees and other adjudication costs, because those 835s should be getting picked up in the system, which is going to pull that data from the 835s to give you that DIR and adjudication cost information, which then you can get into your accounting system, and then you can manage that KPI and manage where you are as far as DIR and adjudication costs compared to your peers. It's a very important metric there as well. And that's why we say it's very important for accurate financial data, because you're getting the receivables in the system. Receivables impact your revenue, and then you're getting the DIR fee costing in there as well. So very important overall component of the financial statements here. We typically see about 21 days is the average, 19 to 21 days is the average receivable outstanding historically.
All right, so in Pioneer, we give you as long as you are doing your reconciliation in Pioneer, you have reports that you can pull on a daily, weekly, monthly period to see what's still outstanding in those third-party remits. We have a control summary that shows you what took place, a little summary of this is what you sold, this is what you collected, these are fees, adjustments that were done on those. You can see just a quick overview. And then, of course, we have an aging report that'll show you 30, 60, 90, 120 plus days. So you can see maybe what payers are falling behind, and gives you an idea of maybe who you need to call and, find out why the payments are slow or you haven't received them yet. So these, doing third-party reconciliation in Pioneer is a really, really good tool to use. Of course, you can do reconciliation in Pioneer yourself, and we also offer a paid program where we do that reconciliation for you. So just a sample of what that control balance looks like, and this one's ran for a date range. And again, like I said, it shows you, your balance forward, your total sales, which are your third-party remits, where they've agreed to pay a certain dollar amount, the actual third-party payments that you've received in, and then any fees that they're charging you after the fact, DIRs, transactional fees, adjustments, because you can see where sometimes Medicaid and Medicare plans go back and do an audit and make adjustments. You can see those. Then we have the age trial balance that shows you your current, your 30, your 60, your 90. So it's when you start seeing these dollar amounts in the 90s that you might want to start taking a look at those payers and checking on why you haven't received payment for those yet. Then we have the fees and adjustment report. This is a great report to where you can see, okay, what you were charged for a statement fee on one particular payment, what they're charging you in additional transactional fees. Your DIR fees will show up here. So once a payment is completely reconciled, you'll see a list of those payments, fees that are listed, and then any regular adjustments, you can actually see a description of what that adjustment was for, listed on this report. And these are where you can deduct these from your total sales, because these are fees that are being charged to you after those initial adjudications. And this just a little breakdown of a closer look of that fees and adjustments report. And then I wanted to touch a little bit on your patient AR accounts, because I know a lot of pharmacies are getting away from allowing patients to charge, but we still do have a lot that still allow that, where you allow facilities to charge and pay once a month. Again, we have reports that are going to allow you to see what those balances are and be able to see that you are receiving payments from the patient side of the RX. So you get your age trial balance, showing you the buckets of 30, 60, 90 days. So, it's very important to watch the patient side of your AR also. And again, we offer a control balance in Pioneer that shows you just a quick summary of what took place on your patient AR account side.
And we get those reports on a monthly basis for those that have the receivables, patient receivables. Yep.
Mm-hmm. Absolutely.
Okay, payroll. So this is obviously a key component of cash flow as well. And, outside of cost of goods, payroll is going to be your second largest expense. So, I wanted to focus on cash flow, really on what I was going to cover here. And payroll is going to be one of those, your average gross payroll. This is gross payroll. So this is, if you're paying a pharmacist $120,000, this will be $120,000 gross. payroll should be about 10.5% of total revenue. That's about the NCPA norm as well. And I can tell you the most profitable pharmacies have payroll, gross payroll, in the single digits of total revenue. And you think about 1% of a $4 million pharmacy, that's a lot of money. So that's a good way of gauging where you should be as far as your peers there. And sometimes we'll see payroll a little out of control, not as much as we used to, but with margins the way they are, you really have to keep an eye on payroll, and that includes making sure the hours of operation is correct, that you're open during the right hours, that even the right days, whether a weekend, Saturday, Sunday, and what hours you're open on those days. So just little tweaks around those two items there can make a significant impact to your payroll over a course of a year. So just be wary that payroll is going to be another key component of cash flow. And we typically see pharmacies that are not at that 10.5% level; they're at 11 or 12%, and that's you don't need to be in that area with your peers that are under 10% of total revenue. So you need to be taking a close look at this each month going forward.
And just a little bit of payroll reporting in Pioneer. Pioneer does allow you to set up to have your employees clock in and out. Under your location options, location, and then under location hours, you can set the employee work week for what day you start your payroll. This allows the system to help be able to calculate those overtime hours when you're running the reports. And then under location and then manage time clock, this is where you would go find your where your employees have clocked in and out. Then we have several reports that allow you to see employee overtime based on weekly overtime, a daily overtime, your total time in detail, and then we have one that you can export, and then a summary per employee that shows like how many hours they worked during that time period, and so forth. So this is just a quick look of those reports. That way you can keep an eye and see where your payroll is standing and how many hours are being worked by employees.
Yeah, I always say, if a pharmacy is above where I'd like to see payroll, one of the things I consider or we discuss is, hey, go in your Pioneer system, pull the RX summary report for the weekend, and see what you're feeling revenue wise between the hours of maybe 3 and 5 p.m. on Sunday, if say they're open that long, and and compare to what it's costing you to run your staff that time. And you can use these Pioneer reports to really analyze, hey, this is typically what I'm bringing in during these hours, and then this is what I'm paying somebody to keep my store open during these hours, and you can quickly find any issues you need to address that way.
Right, and under the RX Advanced Search in Pioneer, there are some employee productivity reports that you can run for those, for a day or during that time frame. That'll help also to see what they're actually doing when they're filling, how long it's taking from start to end and filling prescriptions.
Yeah, that's a great resource there.
I'm going to jump back right quick because somebody had a question, asked what a statement fee was on the third-party reconciliation. A lot of times the payers will charge you a fee for creating that 835 file or that EOB that they send you. So that's what's considered the statement fee. It's basically they're charging you a fee to send you the information on what they're paying you on. So this is an example of the employee summary. And then we're going to jump in and let Scotty go over the KPIs.
Okay. So we've touched on a few of these KPIs already, but one of the key KPIs I like to watch is the current ratio. And this is a great balance sheet ratio. And your balance sheet's going to, I say your balance sheet's just as important as your profit and loss. I know a lot of people just go straight to the profit and loss and see what's down on the bottom line. Yes, very important. But you got to understand that balance sheet, because that balance sheet's going to tell you whether that profit and loss is accurate or not. And the strength of your balance sheet's going to go a long way as far as, how well your pharmacy is, how you could maybe leverage your pharmacy in other areas, whether that's multiple stores or whatever you may be. So the balance sheet is very important, and the current ratio is going to be one of those I follow closely. It's a liquidity ratio, and it's essentially your current assets divided by your current liabilities, and making sure you have current assets and current liabilities categorized correctly is important here, obviously, to get an accurate ratio. But typically you want to see 2.5 to 1, so about $2.50 of cash, receivables, inventory for every $1 of current debt. And that's going to give you a good sense of your cash flow, liquidity in the pharmacy, and just what kind of position you are from a cash flow perspective. And then if you're below the 2.5 to 1 or even below 2 to 1, I say anything below 2 to 1 is a yellow flag. Then you can go and say, all right, why am I below where I should be? And then you can start to dig in your financial statements and find where the issues are. So, it's this information, this fundamental information where you can see that you can put the puzzle pieces together and figure out issues or concerns or what you need to be working on. And this is a great example of that, following that current ratio. We talked about that inventory turnover ratio. Again, a very important cash flow ratio, but 11 is the minimum turns a year. You don't want to be in that area. You want to be 15 plus turns a year. Equity to assets ratio, another important balance sheet strength ratio. So obviously the more equity you have, the more your assets are really paid for. In other words, you don't have debt that is paying for those assets essentially. So very again, a strong ratio to determine the strength of the balance sheet. And obviously a newer pharmacy will not have a very high equity to asset ratio, but a more mature pharmacy might. And when you have a high equity to asset ratio, you got some planning opportunities as far as maybe retirement. You have some opportunities to maybe leverage your store, your pharmacy in other areas or more locations or whatever it may be. So again, a key ratio I like to follow. Obviously the gross margin is going to be your number one KPI. Without your gross margin, without a strong margin, you're going to be struggling. So you got to understand that margin, and that goes directly into inventory and how inventory is impacting that. We talked about the payroll, but the DIR, that's another one. With the information you can pull out of Pioneer with the DIR reporting and the adjudication costs and those kinds of things, you can really start to track this as a percent of revenue. And a lot of folks, will say, well, I don't put that in my accounting system because it doesn't make a difference. In other words, I report everything at net. And that's true. It doesn't make a difference on the bottom line. But if you report it at gross, in other words, you gross up revenues and then you expense out the DIR fee, you get more of an accurate picture of margin there. But also you can track this DIR fee and you can see where you are compared to your peers in the industry. And what we typically see is about 3.5% of revenue is average for DIR fees. And when we're talking 3.5% of your revenue, can imagine that's a lot of money with the average pharmacy at $4 million, give or take, of revenue. So very, very key KPI here, key performance indicator. And if you're higher than the average, what is it that you're doing to not maximize these DIR fees, or minimize, I should say, these DIR fees? And those pharmacies that are under 3% of revenue with DIR, obviously are maximizing their DIR fee situation, and keeping more on the bottom line. So it's just another metric you can add into your accounting system that you can then use to ask the questions and manage and understand what's going on in your pharmacy. Again, key fundamental information here. And then net income is a percent of revenue. The bottom line, typically 3 to 7%, give or take. You know, we got some pharmacies that are in double digits on the bottom line, which is fantastic, and then some that are maybe a negative for the year. But another key metric I like to follow and pay attention to, and again, that 3 to 7% range is where you'll typically fall for an independent here.
All right, so speaking of DIRs and trying to track what those payers are charging, Pioneer, we do give you the opportunity to add those estimated DIRs into your system so that you can see it at the time of dispense. So those can be added under your under the third party tab, going to third party and then selecting that third party and then going to the DIR fees tab. So in Pioneer, we allow you to set up different types, whether they're charging you a percentage of the base, a flat fee, a percentage of AWP, or maybe it's your base minus a percentage of AWP. We do give you those tools to set those up and to be able to see that when you're doing adjudications. So just a little bit. So a lot of times the payers, when you get those formulas from them, they're going to say ingredient cost. In Pioneer, that's your base. Then you have, again, like the flat fee, percentage of AWP, and this AWP is coming from your supplier catalog and or what you have the items set for under the pricing tab, where you can choose a higher or lower AWP or an average AWP. And those DIRs are based on the bin number of that third party. And we know that multiple third parties can use the same bin. You can narrow down those DIRs to PCNs and or group numbers. You can enter a minimum and maximum day supply. You can even narrow it down to whether it's for your brands or your generics. So just a little example of when a DIR is set up. We can see that this is for bin 61502, and they actually have two. They're charging one flat fee of $1, and then they're doing a percentage of AWP at 15%. So I think it's Aetna that I have seen where they've done the percentage and then a flat fee on top of it. So we allow you those tools to where you can add those in into Pioneer for those bin numbers. So then to hit on the actual RX transaction reports, where you're going to see those actual adjudications, all of the RX transaction reports under the analysis tab and the financial reports are based on your adjudication date. And we know that a lot of times that fill date and that adjudication date can be different, because you may come back a week or so and reverse and resubmit. Maybe the patient gave you the wrong insurance to start off with and has a new one, and they come in and give you their new card, so you reverse and resubmit. So each time we do that, that is an adjudication time, and that's what the reports are based on. We do have beta reports, which are going to include estimated rebates that you may have set up for your primary supplier that you have set in your location option. And it includes those estimated DIR fees that you set up. And then this year, I was excited when I saw we created an RX transaction report that groups by your inventory groups now. So that if you have that regular retail RX inventory, and then you have a 340B inventory, you can now see those RX transaction reports broke down by those inventory groups and see those different gross profit margins for the different types of inventories that you have.
And that's very important for those 340B programs out there, because that accounting can be very, very tricky there. So the more information you can get like that is fantastic.
Absolutely. You know, it used to be that we only had the RX transaction report that you could export into Excel, and then you would have to sort it by your inventory group to be able to split out your 340B. But now we have that tool to have it separated, which is fantastic. This is an example of the RX transaction, and I pulled the example of the beta report so that you can see those estimated rebates and those estimated DIRs. And I say estimate because we know that we have to reach certain points for the supplier to actually give us those rebates. And I believe that DIRs are sometimes based on your star rating for your pharmacy. So that's something that you need to watch. So we always call them estimates. And though if you're doing recon in Pioneer, then you'll see your actual DIR numbers.
I love that report there. I look at that report on the previous slide there pretty much for all our pharmacy clients each month, because I want to see what's going on behind the counter here with Pioneer versus what's going on the books and records, you know, with the accounting system. So this is a great report to just compare that what you're seeing on the books and records and what you're seeing behind the script counter is comparable, that you're on the same page, et cetera, et cetera. It's just a great resource from just a CPA point of view for me anyway.
Yeah. And then this is just a closer look at, you know, where the math is coming from to get that gross profit, where we take that total script amount that's going to be the total third-party remit that they say they're going to pay, plus what you need to collect in copay. We subtract that acquisition cost, add that estimated rebate, subtract those DIR fees to get the gross profit. So this is, you know, this is how you can see how those numbers work and formulate to get to that end dollar amount. And of course, just so that it's out there, estimated rebates are only based on your primary supplier. Right now, that's how Pioneer is set up to go by that payer that you, the supplier that you have set up in your location options. So now I'm gonna throw it back to Scotty to talk about some of that COVID-19 relief.
Well, yeah, you know, what would it be a webinar in 2020 without talking about COVID here? And I tell you, you know, it's kind of been a blessing in disguise. You know, as terrible as this COVID thing has been, the cash flow influx that's been out there, that's available for pharmacies, has been a welcome relief as far as that's concerned. You know, the PPPs, the economic injury disaster loans, the grant with the economic injury disaster loan, you know, the PPP, you could apply for that. You know, you don't have to pay that back, assuming you use the proceeds for payroll, rent, utilities, etc. But we did get word that we knew the PPP monies would be taxable, but we just got word last night, as a matter of fact, that the PPP monies, if you expect forgiveness with that loan, that it's going to be taxable in 2020. So if you're doing any tax planning right now, which hopefully a lot of you are, you might as well go ahead and start adding that to your tax for this year, to your income for 2020, because they're going to be taxing that. Unless Congress acts to overturn that, that's where we are today. So keep that in mind. That's breaking news last night. So, and you know, I know quite a bit of pharmacies that got nice, pretty large sums of money there, and they're going to be taxed on that. The EIDL economic injury disaster loans. Most got up to $150,000 if you applied for that. One thing to keep in mind with the economic injury disaster loan is that if you have that, the terms and conditions say you cannot take distributions or draws out of your account, out of your pharmacy. So be aware of that. Understand that term and condition. Talk to your advisors on that. That could be a hindrance for a lot of folks. The HHS provider relief. Boy, what a mess this has been. You know, all of a sudden in April, pharmacies were getting these deposits in their bank accounts. Then they opened this system up for applications for more funding, which a lot of pharmacies did, and they kept opening up the system. I think they're up to a general distribution 3 or 4 now is what they call it. And just said you needed patient care or revenue from patient care. HHS never really defined that. And then, of course, in August, September, they do clarify that prescription revenue is not patient care revenue. So anyway, there's been a complete mess with that. I'll just say this: if you applied and got funding, you should be understand those terms and conditions. But you may want to be prepared to return that money if you applied based on prescription revenue, which they've clearly said is not a eligible source of revenue for applying there. So it's an evolving situation. It's a mess, but I'd be careful with that HHS provider relief. The SBA debt relief, what a change that's been. So that's been, if you got an SBA note on the books, the SBA's been paying your note payment each month for 6 months now. And I know with some pharmacies, that's quite a bit of money. So talking about cash flow, you're not having to pay that SBA note each month. They're making that payment on your behalf. The government is. But again, we believe that's going to be taxable as well. So that's they're paying that money for you. That's taxable income to you as far as we know today. If you did not do the PPP loan, which I really don't know a pharmacy that didn't, but if you didn't, you do have the employee retention credit, and that's actually looking more and more favorable compared to the PPP as this PPP thing unfolds. So, and that's pretty significant as well, the employee retention credit. So for those listening, if you didn't do the PPP, look at that employee retention credit. The employee tax deferral, which was back in late August, early September, that was also available there as well. But you know, I was advising folks just don't even go there. I wouldn't even mess with not paying payroll taxes. You're setting yourself up for notices and all kinds of mess there. So I wouldn't go there. And also one other thing, the CARES Act here was loaded with other tax changes, net operating loss carryback. So you can, if you have a net operating loss, you can carry it back and recoup taxes you've already paid and get refunds right away. Changes to depreciation. If you're doing USP 800 upgrades or to your pharmacy or anything like that, you can go back and change your depreciation there and recoup refunds. So a lot of areas where you can go back and get refunds from taxes you've already paid there as part of the CARES Act in March. So that's also a key cash flow area as well. And then, of course, what's next? Boy, who knows what's next? But be prepared, because there's probably going to be a lot more changes to come in the months and years ahead. So maybe this time next year we'll have a whole nother list of items to go over. But definitely a busy year as far as COVID relief, and again, a lot of this has been a welcome relief for pharmacies getting their hands on this cash flow, which has been helpful in these trying times. So yeah, just expanding on this, you know, any equipment technology needs. Understand that essentially with as liberal as depreciation rules are, you can essentially write off in the tax year when you put that equipment or technology into use, such as a Pioneer system. You could write that entire system off again if it's in use in the tax year. In many cases, of course, there are some limitations in there, but depreciation is very liberal. So always check your capital equipment needs. The cash accounting method for tax purposes is available as well for many pharmacies. You know, I still meant this is part of the Tax Cuts and Jobs Act, but I still mention it because we're still seeing pharmacies under the accrual method of accounting for tax purposes, and they're not taking advantage of this cash method of accounting, which can be quite substantial. And I mean very substantial. It's not for everybody. You have to do the circumstances have to be right, but more often than not, this is very beneficial for most pharmacies out there. So you need to be looking at that. Of course, if you are on the cash method of accounting for tax, you definitely want to be on the accrual method for your books and records and your monthly accounting. So understand those two differences and make sure your accountant understands that as well. R&D tax credit opportunities. With depreciation, you have cost segregation study opportunities as well, where you take a building and you break down a building depreciate over 39 years into components of 5-year, 7-year, 15-year components, where you can take those depreciation rules and write off a lot of that in those short periods of time versus 39 years. And of course, when you're writing off a lot of this, a lot of the cost of a building, you're decreasing taxable income and hopefully pushing yourself into some refund situations to get money in your pocket. And of course, you always have some high-powered retirement planning options out there as well. But again, a busy year for tax planning with COVID. So just you know, be on top of this stuff and maximize your cash flow situation. There's going to be a lot of changes coming down the road. Pharmacy's constantly evolving. You want to be on top of things and be looking at different revenue opportunities, being that healthcare center in your communities, and pushing the boundaries, folks. And that's what you got to do in today's world. And of course plan and make sure you've got everything behind in the back office squared away to help you do that.
So does anybody have any questions for myself or Scotty?
Let's see, I think I see some questions here. Should you return the money on the HHS provider relief? I don't really know. I would speak to your attorneys on this, but I know a lot of pharmacies we're working with are holding on to that money, and we're going to see if there's any future information provided by the HHS on whether pharmacies that applied before they knew they couldn't or weren't allowed to apply and what they need to do. So waiting on more information from that, but I would speak to your attorney and advisor on that. Let's see, I see one here, Tricia. What report shows you actual DIR fees paid if you are using Pioneer Recon and 835 files?
So the actual DIR fees can be seen on the fees and adjustments report. So when you go to the analysis tab and then financial reports, it's the very last report in the list. So once your payments are reconciled, they go into this report and you would actually look at each payment, and then you should be able to see in the description of what type of adjustment it is, it'll say DIR. That way you can pull those DIR numbers and know your exact numbers for DIRs that were charged to you from the 835 files.
Looks like Amanda's got a question. When looking at inventory valuation report, to use the positive batch on hand total or the grand batch on hand total when calculating inventory turns?
It would be the grand total, because you know your negative balances are going to be things that you sold even though you're not showing it on the shelf. I mean, that's why it's really important to keep that inventory up to date and make sure your balance on hands are correct. But yeah, that grand total is going to show you what it is.
That's all I see on my screen here.
I've got a couple here. Let's see. Is there a way to add a COGS column on the accrual sales report to better tie in the accrual of cost of goods in a single report? And will PioneerRx ever create a FIFO inventory option?
Okay, so on the accrual system sales total, adding COGS to that report, we do have an idea out there. So if you can find it and vote for it, the more votes we get, the the more chance it is to get that added to that report. As far as FIFO goes, technically you can do it somewhat in Pioneer if you're willing to put serial numbers on everything. A lot don't want to do that. So it's not a real FIFO at this point. But you know, maybe in the future we'll be able to get that added. And like I said, if you can find that idea in the ideas community and vote for it, or maybe if you don't see an idea that you have, add that idea in. And the more that you get your peers to vote for that, the more likely that idea will be implemented.
All right, going back to DIR, let me see here. Stephen asks if DIR fees on this report are based on the 835 reconciliation or from the third party tab on the third party.
So are we talking about the RX transaction report?
I believe so. That would have been a little while ago. So actually.
Okay, so on the RX transaction report, that's your estimated DIRs that you entered under the third parties based on BINs, PCN, and group numbers. On the fees and adjustment reports, that's your actuals when you're doing reconciliation in Pioneer to see actuals. But on the RX transaction reports, those are estimates based on formulas that were entered in Pioneer.
All right, and one more question for Scotty. Did you say if you got an SBA loan that has to be paid back before taking a sub-S distribution?
So if you got the SBA economic injury disaster loan, you know, we've had pharmacies that have paid that back, the entire loan amount, because they don't want to be bound by the limitations on the distribution or draws from the S corporation. Now you can take it, but it says you have to ask the SBA for approval to take any draws. So you know, that's a big turnoff for a lot of folks. I hope that answers this question.
Okay. It also looks like there's a couple 340B questions. I'm going to go ahead and send those to Tricia to touch on those offline, because that's a whole nother rabbit hole.
Yeah, there's a lot of things that are involved in 340B. So those might be some more one-on-one. Let's talk about, because it all depends on your 340B setup. Like, do you know it's 340B beforehand? Do you own the inventory? Does a clinic own the inventory? Are you on replenishment, or do you keep that actual? So there's a lot of things that are involved.
Who's responsible for DIR fees?
Right.
Yep. That is definitely another rabbit hole.
Mm-hmm.
All right. Let's go ahead and let everybody get back to work then. For everyone that tuned in, thank you so much for joining in. Definitely reach out to your account managers if you have more questions. And if you want to dig in further, I know Scotty Sykes is looking forward to hearing from all of you. Scotty, do you have what's the best way to get in touch with you?
If you just go to our website, sykes-cpa.com, at the very top, you'll see schedule a meeting, and you can click on that and you'll see my link, and I'm happy to talk with anybody here on anything they want to talk about. No charge. Happy to do that. And of course, certainly appreciate the opportunity to be back with you guys, and had a great time. Good topic today. Good discussion.
It was. Thank you. And as always, you can always contact your friendly accounting support team member, by clicking that green phone icon, and they can help answer some of your questions also.
All right, Scotty, thanks again. Tricia, thank you so much for joining us and being awesome every day here at PioneerRx Support. We'll see you guys all on the next webinar.
Okay.
Thank y'all. Have a great day.
Bye-bye.